China began a new year with a clear industrial goal, expanding value-added formats and health-adjacent branding, consistent with national policy to expand tea into cosmetics, healthcare, and daily consumer applications. Beijing has issued national guidelines to upgrade the tea sector, setting a target of 1.5 trillion yuan, roughly $216 billion for the full tea industrial chain by 2030. The language is deliberate. Authorities are calling for improved quality and efficiency, environmentally friendly production, intelligent manufacturing systems, and stronger international competitiveness. This is not framed as an agricultural initiative. It's framed as an industrial modernization strategy. The guidance sets interim milestones for 2028, focusing on modernization in traditional tea regions, expanding product variety, and widening consumption scenarios. But the most consequential detail is this. The policy encourages tea raw materials and components to move into adjacent sectors, including daily chemicals, cosmetics, and healthcare products. In other words, China is signaling that tea is no longer just leaf. To understand the scale of this ambition, consider the baseline. China already accounts for more than half of global tea production, roughly 3.7 million metric tons annually, and export volumes through 2025 showed double-digit year-over-year growth in several reporting periods. Green tea continues to dominate shipments, but value-added categories are expanding. China's domestic market represents approximately half of all of the revenue generated globally. At the same time, global growth rates in tea extracts and concentrates are running in the high single digits annually, and organic tea segments are growing at double-digit rates in many markets. These are precisely the categories aligned with, quote, industrial chain, end quote, language, standard inputs, functional ingredients, traceable supply systems, and scalable manufacturing. There's also a geographic dimension. China's export flows increasingly lean towards African, Central Asian, and Middle Eastern destinations, many aligned with Belt and Road trade corridors, while new style Chinese tea chains continue to expand globally, effectively embedding Chinese supply chains abroad. So what does this 2030 target actually mean? It means China is institutionalizing a dual-track strategy. Scale in green tea exports to volume markets and accelerate to higher margin segments, extracts, ingredients, branded retail systems, and cross-category applications. If executed effectively, this policy could strengthen standardization, increase upstream R&D investment, and intensify competition, not just at the commodity level, but also in functional and value-added tea formats. It's not a production headline. It signals value chain intent. And for global tea professionals, that means watching not only tonnage, but where China is moving next, into ingredients, into branded ecosystems, and into markets where tea competes far beyond the teacup. Business Insight. Mao Limin, former CEO of Zhejiang Tea Group, one of China's largest and most internationally active state-linked tea enterprises, left ZTG after 36 years to found Tea Doctor, a company partnering with a major university to develop products aligned with broader lifestyle and wellness trends. Tea Doctor is an example of a brand positioned at the intersection of tea, health, and functional wellness. Bangladesh's political transition is being read in New Delhi as an opportunity to restore friendlier, more predictable relations. For the tea industry, that matters less in geopolitics and more in logistics. If relations warm, the immediate beneficiaries are likely to be auction participation, transport corridors, and transaction efficiency. Bangladesh's tea auctions remain centered in Chittagong, formerly known as Chittagong, where more than 87 million kilograms were auctioned in the 2024-25 season. Pricing is driven by competitive bidding and sensitive to cross-border flows, currency liquidity, and port throughput. Chittagong's importance is historical. Tea cultivation began there in 1840, but its relevance today is operational. The old rail logic linking Assam to Chittagong port still shapes freight economics in the eastern subcontinent. When political friction rises, transit privileges tighten, customs slows, working capital costs increase. When cooperation improves, these obstacles ease. That can influence realized prices more than modest shifts in production. India remains a significant export partner within the subcontinent. Northeastern Indian teas are geographically closer to Bangladesh port infrastructure than to some Western Indian gateways. Efficient land border procedures and predictable rail or inland waterway links can materially lower freight costs. There is also the currency question. Recent bilateral discussions have included local currency settlement mechanisms designed to reduce pressure on dollar reserves. For tea exporters operating on thin margins, minimizing foreign exchange exposure and settlement delays can be meaningful. Tea is a high-volume trade. Liquidity and speed matter. Climate adds another layer. Both India and Bangladesh are navigating increased variability in rainfall, pest pressure, and yield stability. Bangladeshi analysts have called for research into climate-adaptive varieties. Cross-border technical cooperation in agronomy, pest monitoring, soil health would be economically rational in a more stable political environment. So what does this reset realistically deliver? Not dramatic structural change, not immediate price spikes. More likely, smoother flows, reduced friction, marginal efficiency gains across auctions, transport corridors, and settlement systems. And in a commodity business, marginal efficiency compounds. Business insight. The India-Bangladesh story isn't about signing a new grand agreement. It's about removing friction from a system that's already interconnected. Tea doesn't need political headlines. It needs predictable rail links, efficient ports, and working capital that isn't trapped in FX volatility. So watch the operational indicators. Are customs delays easing? Is Chittagong throughput rising? Are bilateral research initiatives moving forward? In South Asian tea, diplomacy shows up in freight rates and auction sheets. Logistics and politics aren't separate conversations. They're pricing mechanisms in disguise. A large prospective cohort analysis drawing on the long-running Nurses' Health Study and Health Professionals Follow-Up Study, which involves more than 131,000 adults tracked over decades, reports that higher intake of caffeinated coffee was associated with a lower risk of developing dementia. Tea consumption showed similar inverse associations with cognitive outcomes. Notably, decaffeinated coffee did not demonstrate the same relationship. The results were most apparent at moderate intake levels, consistent with a nonlinear dose-response curve rather than more is better. For the tea trade, the headline isn't just the epidemiology, it's the amplification. Major mainstream outlets frame the findings as comparatively strong within nutrition research, while carefully emphasizing that this is an association, not a proof of causation. Independent experts reinforce that caffeine and polyphenol exposure may be contributing factors, but they are not substitutes for sleep, exercise, cardiovascular health, or overall diet quality. What makes this commercially relevant is behavioral reinforcement. Tea is already a habitual beverage embedded in daily routines. When credible, long-horizon data suggests a potential cognitive benefit at moderate consumption levels, it strengthens the, quote, everyday wellness, end quote, narrative without requiring a reformulation or functional add-on. Expect this to surface in retail talking points, earned media, and possibly packaging language, though regulatory guardrails remain firm. The disciplined approach is clear. Emphasize moderation, use the phrase associated with, and avoid drifting into prevention claims. Credibility compounds, overstatement erodes trust.
Produced by Audavita Studios. Connect your voice to the world.